Hi guys, hope you're getting some good value from this series so far. We're talking about the traits, the learning habits and the action habits of successful traders. You know, what are the things that they think about? What are the things that they do in order to make them successful? And what makes them one of the 5 or 10% of traders that are profitable and profitable on a consistent basis? They do have habits that they repeat, and they repeat and repeat and repeat these habits, and these are the habits, the mindsets, the actions that help them to become successful. And we're going to talk about a big one today in terms of analysing price charts and technical analysis. I'm going to be talking today about value in trading. Now, value in trading is something that is fundamental to market action. You know, in order for trades to take place, there has to be a buyer and a seller, and so a market provides value for buyers and it provides value for sellers. Okay, so how does this all sort of translate into what you see in terms of the price action that's taking place on the charts in front of you in your chosen market? Well, obviously what you've got somewhere down the line is you've got an area of value. Okay, so the value may be level or it may be sloping. Maybe sloping upwards or it may be sloping downwards, but somewhere on that price chart in front of you there will be an area of value. And I'm just going to simplify this a little bit now by getting rid of that. So let's say the value is level. How do we actually identify that the value is level at this point in time? Well, this obviously isn't what you see on a price chart. What you see on a price chart is you see this, that type of thing. And so the value essentially is the middle of the price action. It's the middle, it's, you know, the middle, the average between the high prices and the low prices. At the bottom here you have buyers, and at the top you have sellers. This is fundamental to trading, just understanding this, because whatever time frame you're looking at the interaction between buyers and sellers, and you're looking at where they're finding value. When the buyers find that the prices are below where they would consider value to be, they will buy. And when the sellers see that prices are above where they would see value to be, then they will sell. Okay, and this is what creates the market. Okay, so in a level market, essentially the buyers are going to be looking to buy in the bottom half, or in my case I look to buy in the bottom third of a level range, if you like, and the sellers are going to be looking to sell at the top. Okay, so just thinking about this in a little bit more detail now, what's actually happening here is the buyers are buying down here, so they buy here, and what are they going to do when price gets above their value level? They're going to sell, aren't they? And they're going to sell, and they're going to join the sellers, so prices are going to come down. And this is how prices interact all the time on price charts. And so it's absolutely key to trading to try and identify where these value levels are, and also where price is right now in the context of the longer term value. So effectively here we've got 3 levels, haven't we? We've got the middle level, which is the level of average value, and at the bottom we've got the lower level of value, and at the top we've got the higher level of value. So in trading terms, when price comes down here, then we will say that the product is oversold and it becomes good value. The buyers step in and price goes up. When it goes above the mean value, the average value level, then prices will become overbought and the sellers will step in and prices will go down. Now, this is an interaction that's happening all the time, and as I say, it's not necessarily always going to be a level value. It's not going to be a horizontal value level, and it's not going to be a vertical value level. Quite often value is sloping, and what you see on the chart is you see something like this, okay, and that would be called an uptrend. If we reverse that round, then that obviously becomes a downtrend, and the value is in the middle of the price action, so between the highs and the lows as they are sloping upwards. You're beginning to see the picture now. And so within this, of course, you've got the lower level. This is perhaps a, you'd understand that as a trend line, and the higher level, which quite often you'll find is almost parallel to the lower level and the value level in the middle, and we call that a trend channel line. Okay, so at the bottom we've got buyers, and they're not down here, they're here. And at the top we've got sellers. Okay, so they're looking at these charts and they're saying, where is the value? The sellers aren't stepping in, the price went down here, the sellers aren't stepping in here, they're stepping in here and they're bringing it down up here. Why? Because value is sloping upwards. Now, if you're looking at a short-term chart, if you're looking at a bunch of candlesticks and you're looking for, let's say you're looking for your duck in the candlesticks, you might have some price bars going like this, going up, and then, your price is going down, and you get the thing the mind does is it gets transfixed with these bars, and you think, oh, for bear candle, for selling candlesticks on the trot, but the market's going down. But the thing is that you need to be able to gain a bigger picture over what's actually happening in the market, because if the overall market has a value here and prices are generally rising, then there's buying pressure in the market, and even though prices here aren't as low as they were here when the buyers were stepping in, the chances are that somewhere down the line here the buyers are going to come in and they're going to start forcing prices upwards because they've found good value at this level in the context of longer term prices, longer term price action. So in your trading you need to bear in mind these value levels. Let's go through that again for you. So when the market, we've talked about trading ranges, we've talked about trends. When the market is in a trend, okay, it will have a rising or a falling value level, and this is an uptrend, and that value level will be in the middle of the section of prices. And it's not always going to look quite as smooth as that, but you need to be looking for the middle value in a set of price action, and then you can start thinking about where's the top and where's the bottom, and you'll get something like this. You'll have dips below maybe the trend line, you'll have punches out of the top of the trend channel line, and these areas here are where you're going to be looking for your ducks, going back to the duck test that I was talking about. This is the context, isn't it, for trading. Where's a good time to enter a trade? Well, the good time for buyers is down here. A good time for sellers is when it reaches the trend channel line at the top. And so this is the context, and then we're looking for our ducks. So, do you get a reversal pattern here? Do you get a reversal pattern here? Do you get a double top up here, a double bottom down here, a head and shoulders bottom here, a head and shoulders top up there? You know, what sort of, you know, 3 rising valleys here? What's going on in the bigger picture, but also where do your trade setups fit in with the bigger trading picture, the bigger picture of price action on your charts? So that's it. That's what happens in a trend. People are going to be looking to sell from the top, and they're going to be looking to buy from the bottom, and that's where you're going to be looking to find your trade setups. What could also happen is maybe you've got a rising value level there. What can also happen is if prices really get good momentum, then you'll find that they start bouncing off the value level upwards, and then eventually they may start bouncing off the value level and come downwards. And these also, so you may have, you know, your trend line there and your trend channel line up there. These levels here are also important because these are where you're looking for your ducks, your content within the price candlesticks. You know, do they set up trend continuation patterns at these areas here? If they do, then they probably provide a reasonable risk and reward for you to take those trades, looking for a move up to the higher price levels. Okay, so we're looking for, this is setting context for the trading climate, for the type of trades that you're going to be looking to take, and we're looking for the ducks, the content within the price action that gives you your trade setups that you know will determine, you know, you've pre-decided, you've planned this out, you've determined what your ducks are, you've determined what your trade setups are, the ones you're looking for, you know what you're looking for within the trade setups, but they need to fit in with the overall context of the market. And the probability of your trade being a success will be improved if the overall buying pressure or the overall selling pressure in the market is confirming the type of trade that you're going to be taking. So in an uptrend, if you're looking for continuation patterns from the value level, then that perhaps will give you confluence towards prices rising. If prices are at the bottom of a value range, if you like, in an uptrend, and you get a trade setup, a reversal setup down here, then that's going to give you confluence for prices rising, and that's going to help you be successful with your trading. So that's what happens in trends. If you've got a generally flat period of prices like this, perhaps trading range, this is what we call our trading range, then you'll find that the average value will be in the middle. And of course, we're going to be looking to set 3 lines. So this is the bottom, this is the oversold level of value, and this is the overbought level of value. Maybe slightly more streamlined than that, but you know, you'll have your little candlestick spikes out of the tops and the bottoms here. So what we're looking for here is we're looking to sell from this area here, and we're looking to buy from, sell from here, and we're looking to buy from this level here, okay, in these areas here. So you're looking for your duck setups, you're looking for your ducks. Is it looking like a duck? Is it swimming like a duck? Is it sounding like a duck? If it's in these areas here, then you may be looking to buy, you may be looking to sell. I hope this is starting to give you an overview of the type of things that you need to be thinking, but the key is to always determine where the bigger picture is. You know, if you're looking at 1 minute or 5 minute candlesticks, or even 15 minute or 30 minute candlesticks, then you're trading within the bigger picture. And you know, you may have a level range like that, but if the overall dynamic of the market on the bigger time frames is that the market's going down, then the chances are that when prices eventually meet this line, then they're going to go down, because that is the value, maybe a trend channel line, it may be the upper value level of longer term prices, and there are far more people looking at the longer term charts. They all take their trades right now. They all take the trades right now, but they're looking at a bigger picture, and there are far more of them than there are looking at the short-term intraday charts and making trading decisions based on the bigger picture. So you need to have things within your trading setups that allow you to view the bigger picture, and momentum indicators, and I'm not talking about the standard momentum indicators, but momentum indicators on a longer time frame can really help towards giving you a clue in that direction without actually confusing the issue, which is that we still have to do our duck tests for our trades and make sure that the risk and reward within our trades is the right one. Okay, so that's that's effectively what is happening in trading. That's effectively what's going on all the time. There's a middle value, there's an upper value, and there's a lower value, and it's our job as traders to establish, from what we can see on the price charts, to establish where those value levels are in a downtrend. You may have a value level there which has been set by prices, little double top there, and it's going down, and it may be a very narrow band of prices like that, but you can see the identical same thing happening. So you put your trend line in, your trend channel line in, and you can with practice get a feel for how this works. Value will be somewhere roughly in the middle of those two lines, and you'll be looking for your duck setups in a downtrend, probably at the top, somewhere at the top, because every time it goes above the value level, the sellers will be stepping in and they'll be selling. And that's what happens in trending markets. So the sellers step in here. Where do they start exiting? Well, you've got to think about, and this is the interaction that's going on. If they enter the sellers are up here, if they enter their trade here, where's their risk? Their risk will be up here, and they're going to be looking for at least 1 times their risk for their reward. Where's a good time to get out? Somewhere around about here, and therefore when they exit their sell trades, they buy and they join the buyers. The buyers are stepping in here. Prices gravitate naturally upwards until they go above value, when people begin to, the buyers here start taking their profits up here, and the sellers step in and the market starts going down again. I hope that's giving you an idea as to the type of thing involved in measuring value in trading. Value is a measure of where prices are now in the context, the overall context, the bigger picture of price in a marketplace. And there'll be buyers below value, there'll be sellers above value. And sometimes in high momentum markets, when prices are really going up or when prices are really coming down, you'll find that sellers will continue to step in below the average value line, and these will be your continuation. You'll be looking for your continuation candlestick patterns in here, and you'll be looking for your reversal candlestick patterns and price action patterns and chart patterns within these areas at the top here. When we're in a downtrend, are we going to be looking to buy down here? Probably not, because the probability is lower of your trade being successful. And the only kind of caveat on that would be if in the longer term picture, let's wipe that out of the way, in the longer term picture you've got a trend line that's coming up like this, in which case when prices get to that longer term trend line, you may consider looking for what's happening. Will I have a reversal pattern in here that will allow me to take a trade upwards? Hope that's starting to provide some more value for you. Hope you're starting to get a picture. This is technical analysis within trading. Trading isn't, about just knowing one candlestick, just knowing one chart pattern and taking trades. It's about getting all your ducks in a line, setting them all out. It's about understanding context, content and confluence, and figuring out value and understanding the market in terms of buyers and sellers will really help you with your trading. I hope that you're finding this useful. My name's Anthony Beardsley. Thanks ever so much for listening. Thanks for joining me. And we'll go on to the 7th concept of highly successful traders, the 7th concept that traders use and study and learn in order to become successful, in the next episode. Thanks for joining me. I'll catch you on the next one. Bye for now.